Welcome to the Cashflow Academy Podcast. This is where we make investing as simple as possible. My name is Andy Tanner. I'm your host, and I'm joined today by my friends Noah Davidson and Corey Halliday. Gentlemen, welcome.
Happy to be here.
Great time of year coming up. It's time every year. I'm going to be preemptive. Every year I get requests from different podcasters to be a guest. And they always want to ask the same thing, give me your predictions for 2025, which is really silly because I'm wrong most of the time about almost everything I decide. But it's fun to predict. We're more in the mode of prepare than predict, but we do look to cause and effect and policy, and it's going to be an interesting 2025. We're also going to speak today about some of our rituals, some of the things we do or maybe don't do around the end of the year, because it's a great demarcation to say, hey, do I want to make some changes, improvements, resolutions, and such. So with that, I think you'll enjoy the process. I'm excited to learn from what you guys do. But first, brief introductions. Noah.
All right. I'm Noah Davidson. I'm excited to be here. I'm always excited to be here. I've been trading and investing for 20 some odd years. Math's hard sometimes. It's been since I placed my first trade in 97 on a dial-up modem. It was pretty exciting. I lost on that trade. I did pretty good on my second one though. Excited to be here. I've been teaching people how to trade and invest since 2003. So,
long time. Awesome stuff. Corey.
Likewise, I got started a quarter century ago or so and got involved in the markets. Loved it. Got licensed, Series 7, Series 4, which is an options principal. Ended up managing hundreds of traders during that time. And really risk management was the focus, just focusing on good, solid risk management, position sizing, all of the things that are important, hedging, a lot of the stuff that we teach here at the Cashflow Academy.
Awesome stuff. So, and that risk management is, I think, going to come in handy in the next 365 days as we go into 2025. So let's talk about this. I guess you can, before we talk about predictions, let's talk a little bit about ritual and making changes. You can make a resolution any day. There's nothing special about January 1st in terms of your agency. Anytime you can decide to get more or less serious about something, set goals. But I do think that, we follow a calendar and taxes follow that. And so if you're going to have anything to do with financial, making adjustments and making plans surrounding the beginning of the year is always a big deal. So what do you have anything you do special, Corey, around the New Year's time?
Yeah, I mean, so we all do this, I think, which is really keep track of our numbers, right? Our assets, our liabilities, our income, cash flow, and looking at those numbers. And I always reset my plan as far as, okay, in this coming year, how am I going to allocate capital? What am I expecting my free cash flow to be? And the best predictor of the future is somewhat looking at the past. So saying, okay, I can see how much, extra income, what my numbers were for the year and how much excess cash flow I can put to work, and then kind of make a game plan for that. And what I notice is that even though I set a plan, I don't perfectly follow that plan, but having a good outline to work from is important. Whether it's the perfect plan or not, of course, only in hindsight can we say, well, I should have done this or I should have done that. But having a solid plan, and for me, it all comes back to I want to own assets. I feel like I'm successful when I own more assets in 2024 than I did in 2023. So the way that I grade myself is, did my asset ownership go up? Not so much whether those assets went up in value, right? Even if we're in a bear market, I don't consider that to be a failure. I'll say, hey, I own more shares of this and more shares of that. And so that's my ultimate goal, is to increase my asset ownership and then look at, different ways to reduce expenses, do things personally within my household to maybe be a little bit better financially than I was the year before.
Awesome. Noah, do you have any, do you and Melanie get together? Do you do this
by
yourself, or do you do
No, we do it
Melanie?
together. We focus well, everybody likes to set goals. Like this year I'm going to make this much, or this year my goal is to gain this.
Yeah.
We focus on processes and not goals, because the goals are, if you just set a goal and like a New Year's resolution type of thing, most of the time that fails because you didn't establish.
You're more about the pathway.
Steps, processes, habits. So that's really the best, in my opinion, the best way to approach it is I'm not going to be able to control the outcome of the market, but what I can control is this is the discipline, this is the rules, these are the steps, these are the processes.
One of the, as an education advocate, I'm always the thing that is really difficult, I think, for non-investors that want to become investors or beginner level investors that want to get better, is that people don't realize that the moment you decide to take control of something, whether it be as a business owner, okay, I'm going to take control of how I earn money and own a business, or I'm going to be an investor, I'm going to own businesses, but I'm going to run this. The fact that you insert yourself as a factor now demands personal development. And people will either be bothered by that demand or invite that demand. It's an interesting thing. The weaknesses, the human frailties that everybody has are brought to the fore when we insert ourselves to take action in something. There'll be a flaw. If you're an engineer mind, you'll overanalyze and you have to back that off. If you have a very effective personality like me with an A, not an E, temperament and dealing with discipline, consistency, and temperament is a a huge thing just by my own nature. And so the idea of saying this year will be a year of a continued personal development. I'm the machine that runs this thing. I'm the machine that runs the financial statement along with my wife. And so our conversations around this time of year almost always tend towards developing ourselves personally, not working on a thing here, but working on a thing here. There's this thing called be, do, have that Robert Kiyosaki and Kim Kiyosaki talk about. This idea that, well, I want to have all this stuff, but you want to become a lawyer before you can do it. It's a lot like what you said. No, well, I can set a goal to have something, and that's the what I want, right? Have, and then there's the do, which is the processes, but then there's the be. Mm-hmm. And so one of the things I'd invite people to think about, at the end of this year is this idea of who do you want to become? Because a surgeon is a person. We could all three of us do surgery. Yeah, we could do it. But are we surgeons?
I wouldn't say no to a little nip and tuck. Maybe a little facelift.
Performing,
I got the Ozempic face now.
So you're gonna let Andy practice.
I can just see old Noah out there with the doing a
me and you
scalpel. What do they call it? Facelift. So I just had this picture of Noah with his staple gun.
Trying to
saying, Andy, hold still. Well, put it above your hairline. Yeah. No one will ever see it.
Why do you look so surprised all the time?
I'm sure it'll last at least a week or two. Oh my gosh, man. So we need to be before we do. And so people say, well, I'm going to do this year. I'm going to do this. Well, I've got to be before I can do. And be is where the word becoming comes from.
Well, and you could add to that, like language is really instructive. I love breaking down words. This is probably something I pick up from you, Andy.
You're a wordsmith.
Well, no, I'm not really a wordsmith, but I do like them.
A word dissector.
Well, you're saying be, do, have, behave. Be, have.
Yeah, be, have. Yep.
Be, leave.
Yeah.
Be, live the way you want to be.
Yeah.
I think that's interesting. It's very transformative language. And I think that's probably one of the things that really separates successful people from less successful people is the internal dialogue, internal belief. Like the difference between an optimist and a pessimist is something I really try to help my kids understand. Is it's not the negative thought. Everybody has the negative thought, like, oh, I'm not good enough. Oh, I'm not smart enough. Oh, I'm never going to get this. Well, if you maintain that language pattern, that's kind of what you get.
That's why I love hanging out with you.
You got to hang out with positive people.
I've never heard, like, if you ask, I've known Noah for 20 years, and I've never said, how you doing? He's never said, oh man, it sucks. Here's a guy that runs into a tree, almost does a Sonny Bono. His pelvis was no longer Pangea. It is now continental drift. And the guy's in pain, and he's got, how you doing? Fantastic.
Yeah.
Like, you liar. but it's true. Accentuating the positive.
Yep.
The ability to decatastrophize. You know, the internet has become a megaphone for people to talk about their victimhoods, and there's some catharsis, I think, that people experience by saying, whoa, you know, here's my problems.
Yeah.
But
the world became their therapist.
yeah, it's like social media became the therapist. But,
Yeah.
you know, politically, whatever, oh, poor me, there's so much victimhood. And you just can't have that. That doesn't mean to say we're not victims of something. We are. Everyone's a victim of something, whether it's poor health or, you know, crummy parents or, you know, whatever. My spouse is a raging beast. Whatever your issue is, you know, society's keeping me down. But I will tell you that most of us, the vast, vast majority, it's a great test, is when I woke up this morning, do I have the opportunity to learn darn near anything?
Yeah.
Do I have the opportunity to have more self-discipline? And am I completely, it's kind of a continuum on the idea of the locus of control. There's certainly things that I can't affect very much, like tax law,
Yeah.
you know, political stuff like that. But there's a ton of stuff I can do. Once you give me that tax law, I says, okay, well, how can am I completely, you know, handcuffed now?
Yeah.
So the idea, when my wife and I always talk, we talk a lot about trying to improve in how we communicate, in how we, you know, do things with our kids. So I think it's a wonderful time to think about be, do, and have, and that's maybe an outline for people to experiment with for 2025 is, well, who do I want to become?
Yeah.
In 2025, not just what do I want to do and what do I want to have, but who do I want to say I am at the end of 2025. And that's probably a more important prediction or preparation than anything the market could throw at you.
Yeah.
It's a more, that locus of control is something you could predict, hopefully, and have some impact on.
Yeah. And usually, I mean, sometimes when you set these goals, it's almost better to just set some baby steps into them. You know, I think about myself in terms of, you know, say I want to work out and I have these goals of, you know, weightlifting or whatever it is. If I go kill myself the first week and become massively sore, it's kind of not going to work as well as, hey, let me set an alarm on my phone that is at this time of day that I usually have available that reminds me to go and makes it a reminder every single day. And then let me set a game plan for, I'm going to do this, this, and this. And it's not going to kill me at the start. And then I'm going to expand upon that, right?
Well, I started out, I did this once. The goal was, ready for this? Put on your gym clothes.
Yeah.
Oh, geez.
I got the gym clothes on. Sometimes I would just get them on and go have
this turn into a therapy
second
session
breakfast.
for me.
But
But I mean, same thing with the financial markets is like, somebody might say, well, you know, I want to own all these assets and I want financial independence, but that goal seems so far out there for them.
My goal isn't to put on my gym clothes. My goal would be to buy some gym clothes that fit.
Yeah.
gonna have to get these taken out.
I think I'm gonna have to go buy. I'll buy them. You wear them, and you can use them. How's that?
Exactly.
We'll go with that baby step.
Well, I mean, it is, you know, like you say, maybe it's not about buying the asset. Maybe it's about researching or studying
Or
scanning,
paper trading
Yeah.
finding, or
asset.
paper trading.
But make
Or
it
finding the
make it
mentor.
easy on yourself with a few steps. And then also you've got to set those reminders. Like for me, I got to have reminders at certain points in time. You can set reminders on your phone. You can have whatever helps you to be reminded, but that just helps me to where it's like, okay, if I get that reminder, it's like me talking to myself, okay, go do this. And I know I want this goal. And then, you know, it's steps towards that. Like I love golf. So a handicap, I'm trying to get my handicap lower. Well, I know I have to do certain steps. I have to practice. I have to go hit balls. And so I have to put those little things in practice. In the financial markets, there's a lot of different ways that you can get involved. And it might be, like you said, do a little research on this on Mondays and then buy one share. Just start with buying one share of something every week. And I mean, you can go buy a share of Snapchat for $11 per share or something today, and some of this stuff can also be automated at certain points in time as well, where even at brokerages like Robinhood, you can have an automated system that goes and buys a share every Wednesday of this stock if you want it, Yeah. So there's all sorts of things that you can do to start moving on that path towards those ultimate goals.
There's something to be said for that consistency. One of the things I've mentioned often on this program and throughout my teaching. So Kim Kiyosaki, Robert Kiyosaki, those two, what a profound impact they had on my life. I mean, just and continue to do so. The story they told that really resonated with me when they told it, because for some reason I had a vision. When they told this story, I'm like, that's a life changer. That's one thing in the process domain, right? In that domain of processes, across the landscape of all things you can do, this particular thing hit me like that would be life changing. They tell a story of Betty the bookkeeper. Our bookkeeper is Laurie, but Betty wasn't available. No, yeah. Laurie's great. But Betty, they said, we're going to have a meeting once a month with Betty, and we're going to offload our bookkeeping to her, because that way, if we pay someone to do it, we know it'll get done, and she's going to be in control of this, and we have to be accounted. The accounting means you're going to account for things. You're going to be held responsible, is the way they look at accounting. Yeah. Being held responsible and having to account for what you did. And so they would get with Betty the bookkeeper, and one of the rules they had is they would buy assets first. They would pay themselves first, is what a lot of people call it. Is you put something away first, and everything else was secondary after that. They had some charity and some things they put in there as well, and they described how that was life changing. Well, my wife and I, in addition, we were looking at this, and there was a reel on Facebook or somewhere I saw it. It wasn't that good. I understood I thought it was a great principle. It was a poor metaphor. This lady said, well, someone told me once that your money's like a mistress, and if you don't pay attention to her, she'll leave you. I don't like the idea of a mistress, because a wife is much more beneficial than a mistress. Not that I would know about mistresses.
Go on.
But I would assume, I got my wife right here. She's like, huh? So anyway, I like to think of it more as a garden that you tend to. Yeah. And if you tend the garden and you dig about it and you nurture it and you weed the garden, you water it and you pluck it and you prune it, you're going to have a much better harvest than if it's out of sight, out of mind. Wild berries, and pine nuts aren't as good as cultivated, a harvest. So one of the things that my wife and I do that I just can't imagine us not like dropping this habit is every Sunday it could be any day. Ours happens to be Sunday because that's the least busy day, is we get a chance to talk about our financial statement and just review expenses so we know where money went, where it's going. And it all starts with expenses with us because that's the quality of your life. Mm-hmm. I hope that 10 years from now my expenses are much higher because every year I've been able to push my expenses higher. It's better food, better medicine, better clothing, better experience, better education, better everything. Yeah. Value comes to your life when you buy it. Price is just what you spend out. Value is what you bring in. And so the idea of reducing spending means there'll be less value coming into your life. If you're trading dollars for value and you're not spending money, you're getting less value in your life. Now, value is in the eye of the beholder, right? Someone goes and gets a Starbucks coffee every day. Well, I can't tell them not to do that. But that really, really helps. Then you look at income, active and passive. I've had the goal to reduce my active income. I don't think I want it to be zero. One of the things I enjoy from time to time, not often, is I enjoy being asked to give a speech somewhere. And they'll say, Andy, come out and speak. And I have a speaking fee. And my speaking fee is aggressive simply because it takes a lot of time. And every time I do that, I'm trading time for dollars. And yet I enjoy doing it so much. And so I limit those to maybe one a year, 2 a year now, at the very most. I don't want to never stop speaking, but I hate TSA, and I hate planes, and I hate they're diabolical. The hospitality industry is no longer hospitable. Anyway, so you look at income in terms of active income and passive. I'd prefer to build my passive rather than to seek to build my active. So if a person's really clear on that, because there are active opportunities out there, if a person's clear on that, they can really put their energy towards the passive. Yep. Assets, liabilities, all 6 numbers: income, expenses, net income, asset, liabilities, net worth. Those 6, if you focus on them every week, you can begin to manipulate them. And the more education you have, the more tasks you can put on your calendar. That's the second part of the meeting, is after we review the present financial statement, what we hope the future one looks like, we look at tasks and we say, what are we doing this week? Yeah. What an incredible behavior to have that creates a connective tissue between those processes you spoke of, Noah, and the goals that you have to really narrow that down. And I found that for our family, a weekly basis is, so goals yearly, goals monthly, weekly, that's a weekly process for us.
And I think what you talked about there between active and passive income, most people are on this path of they want to get out of active and move to passive. That's what retirement is the idea of, well, I'll have enough in retirement that I'll no longer need, and I can still work if I want to, if I love it, it's my calling. I can keep doing that if I absolutely love it. But for most people, it's like, hey, I want to do this for a period of time, but I want to move out of that. The only way to move out of that is to build up those assets, because those assets are going to provide the income to allow you to do that. And the more assets you build early on, the easier it becomes for you to get out of the rat race, right? To get out of that and start living that passive life. And so this importance of it, all roads in the financial markets lead back to asset accumulation.
Oh, I thought you were going to say all roads lead to the bond market, but that's something else.
Yeah. Well, there is an aspect of, in retirement, more money tends to shift towards bonds because it's more stable or whatnot, but it really is that transitional approach. And so you look at the world today, how many people literally will go into 2025 without any plan whatsoever for their financial well-being and for ultimately getting to passive. If you were to take 100 individuals here in the U.S., I wouldn't be shocked if at least 90% of them really are not working and have goals and doing things towards their retirement in a significant manner. And so the data just shows that the vast majority of people are not doing enough and not focused enough on ultimately what's a very important part of their life. And so what ends up happening is, if you don't take care of that, you're going to be working longer. You might be, working into your 60s and 70s and those sorts of things, because again, Social Security, all those things are probably not enough, and who knows what they're going to be in the future. So
this would be a good time to want to hear a good joke about Social Security.
Yeah.
No, you probably won't get it.
Exactly.
That one was rough.
It's not the best delivery, but
you know what though? When Noah puts his stamp on stuff like that, it seems to be funnier.
It is. It's pretty good.
So the invitation, we're going to go into a break here, but the invitation is simple. It is a great time to meet with your team. It's a great time to talk about tax planning and things you may want to sell or things you don't want to sell. It's a great time to make plan resolutions and begin to look at those habits, baby steps, processes, who you want to be. I hope this first half of the conversation has been helpful to give food for thought about how you might approach it. And make it a special thing. I have friends, I don't think they mind if I drop their names here, the Lannons. They go to Hawaii every year in December, and that week, I want to say it's the week between Christmas and New Year's, they go to the same place, they shut everything out. It's kind of, I don't know if it's a vacation, but it's a retreat, probably would be a good word, where they talk about those guys are like way ultra successful because of those processes. So we invite you to do that. When we come back, predictions.
Prediction time.
Prediction? Pain. I don't know. We'll see. We'll be back in just a moment.
Responsive to questions. They're very detailed in their training. You can start from no investing experience whatsoever and get educated and be able to make a nice retirement for yourself or even a living. It's an amazing educational system, and I would highly recommend it. The one thing that will get you more confident in investing is your education, your competency, and if you can get to that point, you can do anything.
Welcome back to the Cashflow Academy Podcast. I'm your host, Andy Tanner. I'm here with my friends Corey Halliday and Noah Davidson. It's time to speak a little bit about resolutions. By the way, I forgot to give a plug to yourinvestingclass.com and liking, subscribing. So shame on me for that. Go check that stuff out and learn a little bit more. I think we changed what we have there in terms of resources. So if you're watching this later on, it may have changed. But for now, we have a free copy of Power 6, which actually is the perfect read to go through if you want to engage in that process. And I think we might have a companion video that will be attached to that hopefully soon. Nice little mini course that you can take on how to set up that weekly meeting for yourself if that's something that sounded interesting to you. I kind of unveil more detail about how my wife and I do it, share with you my vision board, kind of personal stuff, but I show, the idea of a vision board was, you guys know what a vision board is?
Yeah, I thought it was the secret.
It's a Ouija board, right?
Yeah, it's a Ouija board. Yes, no, yes, no. I'll tell you it is if Noah did a Ouija board and say yes because he's positive all the time. Yes, it'd be like Jim Carrey. Yes.
Man.
There's something to that.
There's two words.
Oh yeah, being a yes man is actually there's probably got to be some no's on occasion, but you definitely want to say yes to most.
That's one of my favorite movies.
It is a good one.
I'm a yes man for sure.
Yeah.
Say yes 1,000 times. Say it 10,000 times. And the word you've said 10,000 times is
yes.
Mind blowing.
Oh, you know what? I haven't watched that in a long time. That needs to be a
that's a holiday.
Yes, invites the possible.
I'm not sure why it's a holiday movie, but it can work its way into the.
It's going to be a New Year's movie.
It should be.
That's the new one. Now I forgot what I was talking
Vision boards.
Vision
boards. Yeah, vision boards. So my wife and I hook up with this guy that you have different mentors that come in and out of your life. And this guy seemed to know what he was doing. So we said, we want to work with you. He said, everybody that I work with goes to this training. You have to go to this training because you have to know how I think. So my wife and I go to this training. It was terrible. It was not, I went with an open mind and personal development, teach me stuff. So they had us do a vision board, which I had not done before. And they had all these magazines and different media that you could cut up and, kind of build your dream life. And the problem is values in the eye of the beholder. And the things that my wife and I value are extremely non-material.
Yeah.
We value the relationship with our kids. We value experiences. We value achievement is a big part of what we value. And it probably comes from my upbringing. My parents were very devout churchgoers, and so that type of stuff just got instilled in me. So we can't find anything really. We're trying to put this thing together with what our vision was. How do you like one of the things is my kids, their goals become my goals. So we have things like become a great pianist or win a championship as a basketball player, stuff like that, more achievement type stuff. And the lady who's run it just hated our vision board. She goes, "You don't have anything material on here." I go, "Well, number one, I have sufficient for my needs. I don't need another car. I don't need another house. I have my dream house. I'm not looking to buy a dream house. I've got it." So, it was more about experiences. Well, we ended up, Marcy and I have a safe word when we're in a place we don't want to be. And
banana.
Yeah, he goes, "It's close. Of course it's food. Of course it is. Of course it's food." I says, "Hey, you feel like eating some Chinese?" And she says, "Yeah." I says, "Let's go." So we got up and we just left. But the vision board stuck with me. And so I went home and I created one of my own that really resonated. And I love looking at it, just thinking, hey, so that's part of the process too. So anyway, in this Power 6 training, I take you through my vision board and the goals, all that type of stuff. So if you want to check that out, we have it for free. So you can go see that, and hopefully it's attached by the time it's there. Prediction.
Oh yeah.
Let's start this time with Corey. I think this is one of the more difficult markets. By the way, I was wrong last year. I predicted stagnation for 2024. Obviously, we saw growth.
In what?
So stocks.
Oh, yes, stocks.
Yeah. So we saw stocks go up in 2024. I thought they'd be stagnant. What do you think? Let's go stocks first, and then we'll talk about. I'll just
go around
you guys.
Yeah, go around the horn. So stocks to start. It's interesting how at the end of the year they'll always ask all the big Wall Street banks for Goldman and Morgan and what are your predictions, and almost always they come back with about a 10% return. But what's interesting about stocks is while they average about 10%. The quantity of times that the market actually returns in that 8 to 10% is like a tiny percentage. It's like less than 5% of the time. Most of the stock market returns, one of the biggest things about stocks is volatility. So usually you're going to have a return that's 25% or negative 18%. It's going to be a number that's quite substantially off of that, right? But then that averages out to that positive 10 over the longer term. The reason I bring that up is it's important because if you look at, here's another thing. Annuities are kind of interesting in that they're sort of a ripoff because, quite a ripoff because annuities will usually sell you. I've got a brother that contacted me and he said, "What do you think about this?" And I said, "It's terrible because what they promise is you won't have downside. They promise you against losses, but then they take away your upside."
Yeah.
So they say, we'll guarantee you this fixed rate.
It appeals to people who have very low risk tolerance and need to feel they will give up so much. That's a microcosm of society, actually, because people will sell their freedom for security every single time. The masses will trade their freedoms to feel safe and secure every single time.
You don't say.
Yeah. Well, you look at any legislation that starts to curtail freedoms, and they'll do it in the name of stability and safety.
Safety is well.
Yeah. Everyone needs to be safe. And that's that and that psychology, which I'm not going to call it a human weakness, I'm going to call it a human trait that is common.
It is.
That's why people buy annuities, is because it's not because it makes sense logically.
Yeah.
It feels good emotionally to say, okay, this makes
have
sense.
This
this makes sense because I'm never going to have to worry about boy, you're losing some upside.
Yeah, I mean, and big time upside. And so I preface that with this idea of the prediction of the better predictions would be to just literally give your estimate of, I think this could happen. And I think there could be a pretty significant downturn in the stock market. The probability of that is higher, I would say, today than it normally is. Yeah. Right? So the probability of the stock market, like I could see the stock market dropping 15%, 20%.
50%? Oh, so 15.
15,
sorry.
yeah.
I got excited there for
50
a minute.
would be quite the prediction.
That'd be
there.
a great deal.
Yeah. But what's interesting about that is even though I think the odds lately have greatly increased of a market decline, I'll own a ton of stocks during that entire decline if it were to happen, and I'll buy more stocks during that decline. Now, I will use risk management to hedge against that if and when that starts. And we always talk about that it's less about prediction and more about being prepared. And so if and when that starts to decline, I would try to adjust and hedge that.
Adjust and hedge. Noah.
I predict that Corey's going to be adjusting and hedging. This is an interesting It's an interesting proposition. I think we are at a crossroads.
Yeah. And
there's the economic climate. There's the political climate.
That's the big one.
And there's pattern disruption going on.
Yeah.
And I don't think anybody can predict what's going to happen in the near term. Now, and again, I think there's going to be trade-offs, like probability of contraction in the near term. If they get the policies right, that could lead to growth in the long term, or better growth in the long term. Predicting pain I think that there's going to be trade-offs.
Yeah.
And we're going to be trading off this policy for that policy. And the market I don't think the market really cares who's the president or what party's in control. But policy eventually will trickle out into the economy. So if you got to change an energy policy, well, that might change the way I think about investing in that asset class.
Oil or green.
Mm-hmm. Yeah, exactly. And or if there's going to be a change in tax policy, well, that might change the way that we all approach and manage taxes, right? Yeah. So I think the prediction is kind of what Corey's saying is I'm going to behave a certain way. I don't know what the market's going to do. Prediction is if the market goes down, Corey's going to buy assets.
Yeah,
that's a safe prediction.
That's a safe one.
So predictions are I usually reframe the conversation, and I don't know if people like that or not. For example, it'll start happening in the next month as people start booking me for podcasts or live streams or whatever to say, okay, Andy's going to come, and I'm surprised people show, because if they followed it along, and like last year, I said stagnant, we had growth. So what's interesting is, did I miss out on the growth because I predicted stagnation? Not at all. So let's talk about this. My sons and I, they're basketball players in high school. And so we watch a lot of film. And most of the time we watch our own film because it's about us, not them. But we do try to watch our opponent at least one time through. And they made this lazy pass, or here, look how extended, there's a 7-cut, whatever we talk about. The game plan is flexible. There, as a coach, one of the things you want to be able to understand is there's the halftime adjustment. And that's when you make the decision of whether, hey, we got to stick with what we're doing and execute it better. It's not a problem with our plan, it's a problem with our execution. So the halftime speech is about execution. Or we say, you know what, this just isn't working at all. We're executing and they're just defending it better. We've got to change tactics. Yeah. And so that is kind of the way I went in this. I says, well, it isn't that what I'm going to do for stagnation is bad. It's just, it's not stagnating. It's not happening. So I've got to change and let the market dictate. There's a when you're being offensive and you're trying to be aggressive offensively, there's an old basketball phrase that says you take what the defense gives you. Yeah. Well, the same is true with Noah and charting. You know, you can take
you can only take what the market gives, right?
Yeah, you can take what the market gives you, and you're going to let the market dictate really what you're doing, which comes to armor.
Yeah.
Corey mentioned we've been more concerned about large downside moves than any time. Well, I went from stagnation being wrong, and the fact that I said it's time for this thing to kind of settle and went further, that even makes me believe now more that we could either have stagnation or even a downturn in the next one. Well, the problem is that's awesome news.
Yeah.
If the market could just go on sale in 2025 or 2026 in a huge way, that's awesome. The question is, does a person have cash to pounce? Like Buffett's got $320 billion now on the sideline, you know, probably in bonds, making whatever. He doesn't want to make, you know, 4%.
Yeah.
He wants to make 20. And so he's really ready to pounce on those opportunities. Well, what our armor class does is it gives you the playbook, you know, adjustment repair. It gives you the playbook to say, hey, how do I manage this if we're wrong?
Yeah.
So go ahead.
Well, I was just going to say I'm a football fan, so I like the Denver Broncos, and they were about to beat the Kansas City Chiefs, who had a perfect record, and they're kicking a field goal. It's like a 35-yard field goal, and they get it blocked.
Yeah, I saw
And they get it blocked because they had a weakness in their line, and the Chiefs had exploited it.
Yeah.
And they knew that, hey, if we really bull rush right here, we're going to be able to break through. You have to know, to your point, where you're vulnerable. And so I want to continue to own assets, but I also know that historically speaking, they're very expensive. So I own a lot of stuff that is vulnerable to some downside potential. So how do I could sell everything and go to bonds like Buffett, but then I got to pay all the taxes and I'm going to miss out on upside. And Buffett will tell you, you can't time these things perfect, but what you can do is, hey, if we start to move into a downtrend, I start to hedge and I know where I'm vulnerable. And the idea, going back to that idea of 10% average returns, the way I sort of think about this, and it's worked really well for me, is when the market's going up and it gives you a great year and you're up 20 some odd % or whatever, you know, just enjoy it. But in those years where you start to turn down, it's not the 5%, 7% down that's going to hurt you. It's what happens beyond that. And so in armor, we kind of talk about that once the market's declined about 7%, you got to get really careful involved, and that's kind of trigger points and so on. And we've got other factors to look at as well. But it's a playbook. It's saying, I know the market's vulnerable, and it could be vulnerable to the tune of 25, 30, 35% deterioration over a couple of years. How am I going to thrive during that time period? And what's beautiful about hedging is it will supply you with more money to spend.
That's the key.
Yeah, if I can spend, let's just say I put $10,000 into a hedge and it grows to become worth $20,000. Well, now I've got $10,000 extra to spend on assets at those lower prices.
Let's say you're Mark Cuban and you've just sold broadcast.com for $5.7 billion in Yahoo stock.
Yeah.
Collar it. Sell some calls to pay for puts. Okay, now the thing goes from $100 down to $5.
Make hundreds of millions on your hedges.
Your puts now, so you lose the money on the calls, which is minuscule in comparison.
Well, make money on the calls if it's a caller, right?
But you spend it on the puts, right? So that money's gone because you spend it on the puts, which is negligible in comparison to the value of that insurance.
Yep.
Well, great. Now you don't have to sell your Yahoo if you don't want to. So you can maintain the asset and you're flush with cash. Literally could have doubled this position if you'd have wanted to.
Yeah.
And so the problem with a crash is not that your assets go down. It's that you don't have cash to pounce to double
on the bargain.
Increase by 10%, or maybe even increase your holdings by 10%, or maybe 15, or maybe 20. depending on how well your hedge goes at these low prices. So the tragedy is not that the market went down. The tragedy is not having cash to pounce.
Yep.
And what hedging does is it allows you to keep your machines, you're still going to get every dividend as long as they don't cut it, which is usually the case. I mean, they might cut some of them, but I mean, think about ExxonMobil's gone through in the last 36 years. I mean, they paid, they not only survived, but raised their dividend since I was in high school.
And it survived oil prices going negative in 2020. And they still paid their dividend.
They'll borrow money and sell bonds to get money to pay that dividend, and maintain that streak. So the tragedy of preparation of a market going down, I would never sell my real estate ever. Look, think of it this way. There's a finite amount of land in the world. If I can get my hands on a piece of land and put that in my family's trust, I'm never selling that, ever. And I'm going to tell my kids, when I die, and I'm in the afterlife and I see that you've put up anything for sale, you'll be haunted. Like it'll be the Amityville freaking horror in your house, dude.
Get out!
There'll be freaking dishes flying off the cupboards, and the AC will break every day. I mean, my goodness, it'll be hot in there. So
just chasing off the realtors.
So you have a piece of the world. You expand that stuff. You never sell thinking, well, I think the value of this will go down. It'll always go up long term. Land is going to go up long term. The same is true with economic productivity. When you own a share of a large company like Apple, don't sell that. Keep it. You have a share of the productivity. Don't sell it. Don't. Collect the cash flow. It's no different unless you have an Enron or unless you have Chernobyl, right? Those you can sell.
If the company shows you that they're
not going to be a part of the economy anymore, you don't have a piece of the economy.
Exactly.
But the idea of moving into 2025, you mentioned we're at a crossroads, and you mentioned politically. I think I'm going to talk about three factors. Both of you, please comment on these. Factor number one is bearish pressure that I believe is coming from decades of fiscal irresponsibility, overspending, problems, monetary policy that is under tremendous pressure, and simply an economic circumstance of money supply, inflation, and productivity. I see fundamental fiscal and monetary issues that just, to me, are unsustainable, and it's time to pay the piper, and I feel that time's coming soon. So that's tremendously bearish.
Well, what's the over-under on austerity versus easing?
Well, I think the interesting thing with Musk is, do you remember the movie Dave?
Yeah.
Where the lookalike becomes the president.
And
he
actually balances the budget?
The president kind of goes into a stroke or whatever, so he's out of sight and mind. They have this puppet guy out there. And he's actually a pretty good president, and he brings in his accountant buddy, his Elon Musk. He says, let's get rid of this bloating. And they're sitting at the table, and they say stuff like, do we really need to pay, $7,000 for research on, toilet seats or whatever? And, well, no, okay, cross that off. If you have $3 trillion that we spend, or $6 trillion that we spend, or something like that, $5 trillion.
The deficit was, I think it's
like $1 trillion every 100 days now.
Yeah, isn't it $6 trillion in expenses and $5 trillion in income or something?
$1 trillion deficit. Yeah. So, could you cut the federal budget in half?
Oh yeah,
I think you probably could.
Nobody's going to like it.
No, well, I think
Democrats
and Republicans, I think Democrats and Republicans look at this. There's enough moderate Democrats and moderate Republicans that would say, you know what, it's time to clean out the garage. We have not cleaned this garage out forever. We have stacks of legislation that should accumulate more legislation.
You ready for some bad news?
Yeah.
$7 trillion in spending, $2 trillion in the budget deficit.
Now think about this. We're spending, now part of that's because it costs more. You're spending money on healthcare, and healthcare costs have gone up. So a lot of that is income stability stuff that is quote unquote untouchable.
Well, haven't we gotten to the point where the interest service on the debt
bigger
is
than
bigger
the
than the
Department of
defense?
Defense. It is. We are at that point. So cleaning that out could be a game changer. And is it going to be painful? Well, hell yeah, it is. If you've run your credit card up to its limits and increased the limits, and you've got to tighten the belt, and it's going
to be painful.
To have the guts, and there's no political will that's been around. That's why it's gotten so bad. Is no one has the guts to have that pain, and if a guy like Trump doesn't care, we might be in for some freaking pain. So, you really have to do all three. Ideally, you have to grow the economy, make a bigger pie, you have to raise taxes, and you have to cut spending. And the mix of that is what everyone argues about. But it's hard to grow the economy if you're not spending. And if you lower taxes, that helps it.
Yeah.
So that's the Democrat-Republican battle. So you have this fiscal government involvement issue of monetary. That's bearish in my opinion. That's very bearish. Okay, bullish. AI is going to make businesses better. All businesses, not just NVIDIA chip makers. If you're selling paper clips, you're going to have AI replace some white collar tasks or enhance the ability of that white collar employee to do more. Productivity, AI increases productivity at a low cost. So AI is a game changer bullishly.
Technology.
And then politically, I don't know what the hell's,
I mean, automated driving, all these different technological advances, and technology tends to be
does that hurt
a little
jobs?
more
Probably.
deflationary, right? But
it is deflationary.
But it does hurt. I mean, it could hurt jobs in terms of you're replacing
and then you
a
have
lot of individuals.
And then you have no one to buy these cool things.
Yeah. Yeah.
Right?
I mean, it's...
If you have no jobs, who's going to buy the Apple AI? Well, the Apple AI gets cheaper, but if you have having a little money is a lot different than having none.
Yeah.
So it is a fascinating crossroads, as you said, as we have these
and it's
legislative ideas, these policy ideas, the political disruption of a...
And I don't think it's just unique to the U.S. or the U.S. economy by any stretch of the imagination. This is a problem of Western economics. Yeah. And China, to a certain degree, has a similar, issue. So, I mean, growth, austerity, I mean, there's a compatibility there. I don't know. I don't know what the policies have been are going to keep that snowball rolling up the hill. Are they going to? I'll believe it when I see it.
Right, and that's the other thing is Trump does love the stock market. Like he has referenced the stock market probably more than any other president in history. So is he willing to forego economic growth and good stock market returns during his
it's a beautiful
presidency?
Word. Tariffs.
Tariffs.
It's a beautiful word.
Tariffs are not great for the stock market.
Well, it depends on how they're. I mean, it's a strategic. If used strategically, tariffs are powerful. I mean, go to Europe and try to buy a U.S. made automobile. You can't.
Yeah, that's true.
Because of tariffs. It's like every country in the world uses tariffs. It kind of becomes a question of how are you using them and to what end.
A lot of it, I think, is saber rattling.
Oh, absolutely. Yeah, absolutely.
And that's why I love the idea of them getting in there and cutting out a lot of needless. Like I can imagine there's trillions of dollars that they could say, oh, absolutely. So I'm a big fan of that. And if that means pain in the short term, I would completely be on board with that personally. I would say, hey, if my stocks have to go down for a few years to get things much, much better for the future and get the debt under control and get a balanced budget and get some, all this waste. I mean, everyone knows the government's so inefficient and wasteful, and there are just literally billions and billions of dollars. But that's the problem is that the people that are taking advantage of that have no desire whatsoever for change.
They're going to dig their claws in and fight that tooth and nail.
Absolutely.
The idea of leaving, I mean, it's actually could be a healthcare crisis because This is really sad. This is one of the saddest things, and we need to take this seriously. So when we had the problem with Portugal, Italy, Greece, remember that?
The pigs.
Yeah, Spain. Yep. I was going to say that. You could say it back then. Now you can't call them pigs. They get canceled. No, I don't know. But we had the pigs. Now it's the bricks.
Yeah.
Right? Pigs, bricks, build your house of straw, whatever. So you have Greece.
Don't leave Ireland out of that equation.
And this might be apocryphal, so fact check me and put in the comments that I'm wrong, because this may be apocryphal. I read it on the internet, so it might not be true. And I'm not a religious expert by any stretch, but it was my understanding that Greek Orthodox religion frowns on suicide. I think that's fair to say, that they frown on it. I don't know if they deny certain prayers or certain funerals. I don't know if they go that far. But historically, Greece has had a suicide rate incredibly low. So their financial statement gets screwed up, and the Germans have the strongest economy probably.
They are
in Europe.
They are the European
in
economy.
The European in the 18, 20 countries or whatever makes up the European Union.
Yeah.
Germany has a big say at the table. So they say, look, Greece, the percentage of government jobs, I mean, your government, that's why you guys have such a horrible balance sheet, is you pay everyone pensions and you pay everyone, government stuff you got to cut.
And then they're very low on taxes paid.
They started cutting government jobs because they had to. They were forced to by the Germans. And I'm not blaming the Germans, because the Germans, they had the Weimar Republic. They know what they're doing. I mean, where does austerity come from, right? They invented it, the concept pretty much. So the suicide rate in Greece went through the roof because they would lay off a government employee and they had no idea how to go out and get a private sector job. They just saw that life is not worth living. If I have to go out and produce value in a private sector and say, hey, I'm worth something in this world, I'm worth something outside of government, I can do work and contribute outside of government, that thought, think about that, how crazy that is. That thought was so awful that the suicide rate in Greece exploded. So someone fact checked me on that. I just remember seeing that talked about during that time. So, we've got to be careful with this.
Yeah.
And they're human beings. They're not
numbers. And it's not them that's the problem. It's the problems that have been built up for years and years and years. And
they're a victim of really bad policy.
Absolutely. And so they're caught in the middle of that. And so it is a tricky dynamic where it's like, we don't want to hurt them, but we also need to get rid of waste.
But you could take if you could say this, and we're way off of predicting, but that's what we do on this show is digress. I remember when 9/11 happened, and they switched to TSA. I was incensed by it. I says, listen, use technology to preserve the integrity of the cockpit. If you preserve the integrity of the cockpit, you don't have another 9/11. The 9/11 happened because they were able to breach the cockpit. They didn't have a bomb on there. They didn't have, they had basically razor knives and an ability to breach the cockpit.
Yeah.
So instead of spending $800 zillion on people, TSA, I'm sorry, my friends that work at TSA, that's a jobs program and it's security theater. And if you look at
you don't enjoy the pat downs?
Oh, come on! That's the only good part about
free
it.
Human contact.
That's free human contact.
Hey, you have to pay anything. I guess
usually you have to pay for a massage.
Dude, do you need me to give you a hug? You are killing me. I mean, you just can't have a podcast with no one, man. It's so
that's
good.
free human contact.
Hey,
that's a good one.
God. Pros and cons. There's trade-offs.
Yeah. Unbelievable. So but you look at something like that. You could use technology and policy to take the whatever amount of money you spend on that, man. That'd be first on my list. Second is the IRS.
Yeah.
You know, they just hired a zillion guys to go and to me the danger of that is so worrisome is that I think whether you like Trump or whether you like Kamala, I got a basketball game tonight. I don't have time to worry.
Well, if you give people a binary choice, they're going to choose one.
Yeah. Well, it's like Teller says. You know, it's one of the darkest psychological secrets, Penn and Teller. You know, when given a choice, people feel they've acted freely. But part of if you look at Trump's trial, it's a very complex thing because, you know, the idea that an election is rigged and all that stuff, that really plays with the foundations of our democracy. But the idea that you take a misdemeanor because you paid off a porn star and you take that misdemeanor and you turn it into a felony, if you begin to weaponize government and people, whether you did or not, whether you perceive that it's weaponized, hiring a host of IRS agents is scary to the people. It's like they're going to weaponize this. They're going to come after with audits and everything else. So,
well, when you hire a bunch of IRS agents, what are they have to justify their job. You know, if you get
UDOT, the Department of Transportation is going to tear up this freaking road that's fine.
Yeah, because you have to justify your employment and your need for your paycheck requires you to do something, you know, whether it's justified or not. You have to do something or else your job is not needed. And so they'll find something. And so,
I wonder what it is statistically, how often the government does get smaller. Because NASA got smaller. There's a great example. When Kennedy said we're going to the moon, it was 5% of the budget.
You believe we went to the moon? That's amazing.
I didn't say we went to the
moon. You see that flag waving in the wind?
Listen, Candace Owens. Who else believes in that? Who else? Who is it that absolutely doesn't believe in the moon landing?
Joe Rogan.
I won't say we went to the moon. I'll say we spent a lot of money acting like we went to the moon.
Yeah, you know what? Hey, people believed it. That's enough for me. The Soviets bought it.
That's all that really mattered is the Russians believed.
We're much smaller than the.
Okay, well, here's an example right now. If we were to channel Javier Milei in Argentina right now, have you seen what he's doing down there? He took a chainsaw. Afuera.
Well, they've defaulted on their debt so many times at this point.
They have no credibility.
They have no choice.
Right.
And then it gets really ugly and nasty. And, you know, that's where you don't want to be. You don't want to be doing things out of crisis mode. And that's where the government always finds themselves is they'll only do it once there's a crisis. They won't fix it ahead of time to avoid the crisis. You know, it's like the Fed. Yeah. The Fed's always after the fact. They're scrambling. Yeah, they didn't start raising rates when inflation was until it was up above 7%. Think about how ridiculous that is.
Really, 10.
Right, but they were still in a bond buying program at 7% inflation. Like they're just reactive. There is nothing about them that will say, "Hey, we've got a problem here ahead of time. Let's fix that."
And that's
they're not
the nature of politics.
They're data-driven.
That's the nature of politics. Is we'll deal with it when people absolutely have to, and it's broke.
Yeah.
And this idea of going in and gutting it before is an interesting one. So back to predictions. You know, Joe Rogan has a big podcast. We have a small one. We just as well be smoking marijuana ours with yours, dude. You kill me. I mean, if the laughter's there, we just will have the cannabis to go with it.
Next podcast, did the moon landing actually happen? I think we got to take that on.
Oh my goodness, with him?
With
Why not?
With Noah.
I'm a small tinfoil hat kind of guy.
How was the flag waving in the wind?
Gravity.
That's a good question. It's because it was filmed on a studio in Burbank.
With 1/6 the gravity. How'd they do that?
I don't even know all the arguments against it being real, but I do know that the flag was part of it.
You know, how about the biggest opportunity for a selfie ever missed was Neil Armstrong. He took all the pictures, and you couldn't turn the thing around one time and go like. Give yourself this one on the moon, you know?
Right.
Golly, you know what?
Selfies hadn't been invented
yet. You go to the moon. and you get no picture of yourself on the moon. That slipped our mind, right?
Yeah.
Sorry, Neil. I like Neil. So prediction. You say, come out and say it. Bearish or bullish? Are we going to finish the year higher or lower?
I would think lower.
January?
I would think lower.
So you think the market will be lower on December 31st, 2025 than on January 1st, 2025?
Correct.
Higher or lower?
Well, if he says higher, wait, no, you said lower.
I said lower.
I'll take the higher because they're just going to end up lowering rates and inflating it.
Pushing
I think they're going to play a game of chicken and flinch.
I don't like going against either of you guys, so what do I do?
You go flat.
I went flat last year and I was wrong.
Yeah.
I think we're going to pull back. I do. I see the factor of AI that pushes us higher, but for me, what makes a market go higher? Money needs to get poured into it. So the question is there enough money sitting at the central bank that banks decide to take out of there and lend? And can they do it at these rates?
Yeah.
I think it has to do with how much currency is not in circulation that could go into circulation.
Yeah.
That's my big unknown. We know how much is in circulation. We just don't know how much is going to go from out to in.
Yeah.
And I'm going to have an interview, by the way. I'll tease another podcast. And I think I've got Richard Duncan coming on.
Oh, that'll be fun.
So,
but I would say if you're looking at it from a couple of checkpoints, usually as January goes, so goes the year. So
January barometer.
Yeah. So if January's bad, it tends to lead to a worse year.
70% of the time, every time.
Yeah, exactly. But it's a pretty good barometer. It's not perfect like anything else. And then also, I would think in terms of the markets, you can kind of, maybe I'm cheering because I would love to see a market downturn more than I believe that there will be some checks and balances. But I would say if you look at a wide variety of things, like Bitcoin being a prime example, just absolutely surging to the upside.
Yeah.
We're in the midst of bubbly type of behaviors and sentiment and so on. The problem with that, though, is that I always tell people bubbles last a lot longer and get way more ridiculous than you ever thought was humanly possible. So I'm almost speaking against my own prediction and saying we may not even be at the ridiculous, because remember, Greenspan said we were irrationally exuberant in like 96.
Yeah.
And if we were irrationally exuberant there, what happened in 97, 98, and 99? So things can absolutely run out of control on both the upside and the downside for extended periods of time. And we are seeing bubbly behavior. Maybe we're still inflating that bubble.
But Buffett doesn't see value today.
Yeah.
He sees it ridiculous now, and he's in cash.
And he usually is he says he doesn't time the market, and he doesn't time it perfectly by any means, but he's got a pretty darn good track record of, like he really underperformed in 99, but he went into one of those bearish cocoons in 99, which was way too early. And they had articles about Buffett. Hey, he's lost his way. He's way behind the times and so on. Fast forward the next year and Berkshire is booming and the market's imploding, so he may be off by a year or two because he's really been bearish, I would say, for the past year and a half, 2 years, something like that.
Than that.
Yeah, maybe.
Great stuff, gentlemen. I'm in trouble. I just looked at the time and I had specific instructions from my boss that we weren't allowed to ramble as we do. But that's what this is about. So I'll have to beg forgiveness there.
Just tell him we talked about the moon landing and everything.
All will be.
I'll make another
forgiven.
prediction. Tangents.
It went south pretty fast.
Yeah, that's a solid prediction. Tangents in the
in a podcast,
in our discussions in the podcast for sure.
You think we really went to the moon? Yeah, I do.
That's cute. You think we went to the moon?
I know that the Bigfoot sightings are not real because I was the one in the picture.
Yeah.
No, tranquilizer dart, Andy's neck. Don't take your shirt off again in public. All right. You've been listening. Hopefully you're still listening.
They're laughing with us.
Hopefully you're still with us, and I can say you've been listening and watching the Cashflow Academy podcast, where we make it fun, simple, real. A lot of fun. Really love you guys. It's also the holidays is not just New Year's, but Christmas, Thanksgiving. Just a heartfelt thanks for your friendship and all you bring to Cashflow Academy. Freaking love you guys. So with that, we'll sign off. Go to yourinvestingclass.com. Get those goodies I mentioned, particularly this time of year. We'll see if we can't get that. I think we've got that video ready to go for Power 6 ebook and maybe a companion video with it.
And hit that subscribe button.
And yeah, smash it. Baby.
Share it with 10 of your friends.
There you go.
Or 12.
Make that prediction. We'll see you next time.